Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Oh, I think I'm having some connections here. Hold on a second, please. While I Hello, 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 ladies and gentlemen. Can you hear me? Okay, let's see. All right, great. Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I think I had a little bit of network itch the other time, but I'm glad that we are back on. So excited to be with you here this morning. Let's run through our daily routine quickly just to confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. So your highs will give me a positive feedback that we are good to go this morning. So I look forward to your comments, please, and we shall be kickstarting the session anytime soon. Okay, so what do we have here? I think we have a bunch of comments right here from Panayo621, Panayo621, Sebi2, DDMX, good morning, Edge Lopez, Richard HSU, Hadre has, good morning to you, Richard FX, good morning to you, Rizwan Mad, good morning to you. Carrie just responded to your message there. Please do as she has advised, and you will be attended to in due time. All right. Thank you very much, Carrie. Good morning to you. Thank you for being around with us this morning. So it's on this note I want to welcome you all once again to yet another promising edition on the X Trend Speed Live. My own name is Sheriff Daramola, and for the next 1 hour I'm going to be your host as we will be delving into the financial landscape, looking at the current market dynamics from both technical and fundamental perspective, using our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to manage our current positions while we also try to unravel the potential trajectory for price action today. And in fact, I have very interesting and simple trading setups that we will be using to guide our decisions for today. So I encourage us all to stay tuned in so that we don't miss out on the ideas we will be sharing today. And so far this week, we have been monitoring 4 financial assets, which includes the USOILSPOT, the USTech100, the GBPUSD, and finally the XAUUSD. And in fact, we've done fairly well so far in the last 3 days, I think. And yesterday we saw the CPI data, which came in at an hotter than expected actually, and this has resulted in some positive traction in favor of the US dollar. So we are going to be looking at how the market had reacted to the CPI data and how we intend to use the historical data we have to position ourselves for the next move. And for those of you who are joining us for the first time, you're highly welcome on board, and I'm very, very excited to have you around with us. And I do know that you will be wondering, what is it that is going on here? What is it that we really do during the Extra and Speed Live technical analysis session? Well, as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. It officially kickstarts 10 a.m. UTC, 11 a.m. West African time, and my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us, the better you will become at comprehending our analytical approach, utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. I see you, Dragosh. Good morning to you too. So with that being said, here we shall be diving right into the business, and the first thing we usually do is to keep tabs with the fundamental factors that are likely going to be influencing the market sentiment today. And by checking the economic calendar, we want to identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on the next potential move prior, during, and even after this economic event. Now, based on the assets we are looking at for this week, we have been focusing on economic features from the United States and the United Kingdom economic dockets. Now, so far this week, we've had a bunch of impactful events from both economies, from the higher low unemployment rate, claimant count rate, employment change, claimant count change, and of course the average earnings, all from the United Kingdom yesterday, giving us an insight into the labor sector of the United Kingdom. And from the data we were able to get yesterday, it really shows that the labor sector is contracting, that is for the United Kingdom, and this has also rubbed off on the GBP, on the pound sterling against the US dollar. And in the last 36 hours, the price of the pound sterling had dropped significantly well, and the CPI data from yesterday did not help matters at all. So we are going to be looking at that in a moment and how we will be capitalizing on the next move. Then yesterday, one of the main highlights for the week was the consumer price index from the United States, which came in hotter than expected, resulting in that positive traction in favor of the US dollar yesterday. And this hotter than expected data has now thrown a clog in the wheel, and there is an the sentiment in the market is now leaning towards higher interest rate for an extended period of time, as the consumer price index reveals that the US economy still is witnessing inflationary pressure at this point. Now, fast forward to today, Wednesday, March 13th, we are looking at we do not have any high impactful event today, so we included the mid-tier economic features, and what we have here are economic features from the United Kingdom. So we have the industrial production, we have the manufacturing production, which of course did not do well, and we did not have any expansion in the manufacturing production, though the gross domestic product for month on month came in at an expansion of 0.2%, just as expected. And the good news is that the figure is better than the previous data. Remember, the last two quarters from the United Kingdom's GDP showed contraction, which technically puts the United Kingdom in recession. However, it's good news that the economy is trying to recover now, with a 0.2% expansion is a good signal that we are likely seeing some improvement in the last 1 month. So we want to be seeing how the market had reacted to this event. Then we also saw the manufacturing production, which is an insight into the UK manufacturing activity. And this also had an expansion of 2% just as expected, but a little bit lower than the previous month. So these are the events we have for today. So besides this, there are no other events. So let's dive right into the chart and let's use the historical data we have on the chart to manage our trading positions and at the same time strategically position ourselves for the next move. Then before we go into the chart, I also want to emphasize that tomorrow we are looking forward to a couple of high impactful events from the United States too. We have the producer price index, which is also an inflationary gauge. We also have the retail sales data, and which other one do we have here again? Okay, that's all for tomorrow. So this event, the anticipation of this event is likely going to be influencing the sentiment in the market today, as major key players may want to step aside waiting for this event before making any aggressive or directional move. And as a result of this, we may likely see some extended sideways trading activities today, choppy market condition possibly. So we want to keep ourselves ready for this kind of scenario. We are going to be taking all of this into consideration while we review the current market structure. So as usual, we shall be going right into the chart right now. So the first asset we are going to be looking at today, as usual, is going to be the USOILSPOT. And what an interesting situation we have on this asset since the beginning of the week. As you will see, the current market dynamics has been very, very choppy. And remember that at the beginning of the week, we were holding on to a bullish bias, and as it is, the bullish outlooks lacks the follow through we projected at the beginning of the week. As you will see, oil prices continues to hover around the break even point. As every point in time we capitalize on that bullish move, it usually comes back into our entry point, as you will see at this point. Now, before making that decision on Monday, what did we actually see on this chart? So at the beginning of the week, we had this range bound structure where price was confined within the $77.40 level and the $76.80 area. Now, after identifying this, you know how we treat our range bound trading structures. We exercise patience due to the indecision, waiting for markets to finally make a directional decision, and that will make us wait for either the breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. And as it is, we did be on standby for the breakout of these two levels, that is the $77.50 area and the $77.40 level. And you can see every breakout saw price snap back into the entry point, and the same thing has happened again in the last couple of hours, though there are two buy positions running at this point, but we're still not confident that this bullish momentum will follow through, as you will see that that $78 area had continued to be a major barrier for buyers since the beginning of this week. So will this bullish momentum continue to the upside today? Well, let's see how this is going to be playing out. And for those of us who already capitalized on this bullish opportunity and you have your buy position still running, kindly move all your stop losses to secure the current buy position. And I'm of the opinion that anywhere around the $77.80 level seems most appropriate to move all stop losses to. So please keep a well secured position today as we continue to monitor price action. Now, before we go into the technical details of what is going on from an holistic perspective in with the utmost intent of strategically positioning ourselves for the next move, it is important for us to also keep tabs with the fundamentals behind the scenes that has been affecting this current market dynamics. Now, yesterday, we remember I was mentioning here yesterday that we will be looking forward to the OPEX Plus monthly report, and the report came out and we saw that the OPEX maintained its previous projection, forecasting a 2.25 million barrels per day increase in global oil demand for 2024 and a 1.85 million barrels per day rise in 2025. The organization also mentioned an optimistic outlook for economic growth extending from late 2023 into the first half of 2024, leading to a 0.1% increase in its 2024 economic growth forecast. Now, there is one thing about the OPEX Plus monthly report which usually does not market participants do not take seriously. Now, one of the reasons why that is, you all know that OPEC Plus have been trying to cut oil production with the utmost intent of artificially increasing the price of oil. Now, we understand that the narrative that the OPEC Plus members will be pushing to the public is going to be more of factors that will support the price of oil to rise, and I think this is one of the situations we see with this current report. And the market has not really followed this report. As you will see on the chart, the nature of price action since the report came out is still more of a choppy conditions where we still do not know where price is likely going, as we have a situation where price is confined within a range. Now, besides this, I still think that the downward pressure, the upward situation in this market is still very visible. As you will see, we also had the API weekly crude oil stock, which unexpectedly dropped by 5.521 million barrels for last week, contrasting with an anticipated increase of 0.4 million barrels and the previous week 0.42 million barrels. Now, this significant decline hints at a potential inventory shortage in the oil market, likely pushing prices upward due to reduced supply. Now, the deviation from the expected increase and the previous figures indicates a shift in market dynamics that could impact market participants' perception, potentially leading to heightened volatility in the US oil market today. So this is one of the major reasons why I've emphasized that we move all stop losses, secure the current position as we await the upcoming EIA crude oil stocks change data, which is coming up later today. Now, with a well secured position and based on the information we've had here, what are the chances that this momentum will continue to the upside? Do we have any technical structure that supports the idea, or are there chances that sellers could still maintain the bearish momentum from last week? Now, let's scale back up into the 4 hours time frame. Let's look at the structure we saw here at the beginning of the week. So, looking at the chart right here on the 4 hours time frame, remember, especially for those of you who have been with us since the beginning of the week, we had the structure identified after taking into consideration the character of market participants since the beginning of the month of February. And what we saw here is an outright uptrend situation, as you will see. And after connecting the series of higher lows, we have a beautiful ascending trend line to work with. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that support the idea of buying. However, something interesting happened last week Friday as we saw price action break down this ascending trend line for the first time in about 4 to 5 weeks to incite a potential bearish move. And of course, we did sold at some point, but as you will see, after price tested that $76.50 area, we're beginning to notice something that looks like a reversal setup with the appearance of continued buy pressure and series of higher lows here to incite a potential reversal move. However, we were not keen on jumping into the bandwagon yet, as there is still the potential of a retest of this ascending trend line to incite a sell-off to the downside. So we are very careful of this observation, and to guide our trading decisions, we decided to position our key level for this week, and we had it situated along the $77.50 area. As you will see, this area here had played a major role in determining the direction of price action in the last 3 to 4 weeks. And you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. So as it is, it makes a lot of sense for us to look out for opportunities to buy. So that's why we kept on that bullish bias at the breakout of that range we identified on the 1 hour time frame. Now, the only condition that will make us sell is for us to see continued selling pressure below the $77.50 level, which is yet to happen. So scaling back down into the 1 hour time frame, what do we have here? So right here on the 1 hour time frame, the bullish bias still remains intact, and as you will see, price action is still maintaining its momentum above these ascending trend lines we spotted here. So these ascending trend lines will continue to guide our trading decisions for today. As long as price remains above, then we will continue to look out for buying opportunities. And in fact, if price can break out of the $78.50 level today, I'm of the opinion that we are likely going to be seeing a massive move to the upside. So I have a buy stop order above the $78.50 level to maximize the next potential move. And please don't forget that we could add more positions at the breakout of the $79.40 level. So we want to be marking out this point. This was the where the bearish momentum started yesterday. So we have the $79.40 area. So let's mark that level out as well, and we shall be using it to maximize the potential of this bullish move. So this is my simple view as regards buying the US All Spot today. However, if it so happens that this ascending trend line got broken to the downside, this one in particular, if it gets broken to the downside, we might be getting ready for a downtrend continuation. But please remember that we are not jumping into the sell positions outrightly, but ensure to wait for confirmations to happen, like a retest of structure before jumping into that position. And then if price breaks down the lowest point for this week at the $76.80 area, we will be adding more sell positions to our existing trade. So this is my simple view on the XAUUSD for today. Sorry, for the US All Spot for today. If you have any questions whatsoever, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions, while you also use that time to mark out these levels and structures on your chart. All right. So I see you yet 90 Petite X Trend. Good morning to you. I think okay, there are no other ones. So in the absence of no questions, I'll take this as a confirmation that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset we are looking at this morning is going to be the USTech100, and in fact in the last 48 hours we maintained a bullish bias on this asset, and currently we have a minimum of 2 buy positions running in profit at this point. And let's quickly run through what really happened at the beginning of the week that led to the situations that made us to buy this asset. Though we had some selling opportunities at the beginning of the week, we did not do very well at all. Let's look at this together and see. So initially it was more of a range bound trading activity where price was initially confined within the 18,040 and the 17,950, where we were looking out for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now with the situation here, we had a sell position triggered at the beginning of the week that moved about, how many pips was that? It moved about 75 pips. Moved your stop losses accordingly. We were able to take in some profit on that one, but the second entry failed as we saw buy pressure come in yesterday. And during our live session yesterday, we expanded the range to acknowledge the lowest point where price action is for this week, which is the 17,880. So we had a new range identified here. So yesterday we were saying that we will be looking out for selling opportunities only when price breaks down the 17,880. But as it is, you can see price never gone that far, and instead we saw price maintain a bullish bias, breaking out of the resistance line of that range, and since that moment we have been buying this asset. And if you remember, during our live session yesterday, we said that we will be maximizing the potential of this bullish move by adding more positions at the breakout of the 18,135 level. And at this point we have a minimum of 2 buy positions running in profit, where the first buy position is currently running with 150 pips, while the second buy position is running with about 61 pips in profit. So we have over roughly above 200 pips right now. So it's important that we ensure that all buy positions at this juncture is well secured. So kindly move your stop losses accordingly, lock in this profit while we continue to monitor price action. So for me, I would suggest that anywhere above the second entry seems most appropriate. Please remember to always give enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next course of action? Are we continuing the uptrend, or are there chances that sellers could come in at any point in time? Now, for us to understand this structure so that we can make a well-informed decision, let's refresh our memories as to what we saw on the higher time frame at the beginning of the week. So right here on the daily time frame, the first thing we did on this asset was to consider the character of market participants since last year, October. And after doing that correctly, we were able to acknowledge a bullish momentum. And when we connected the series of higher lows, this further buttresses the strength of the buyers in this market. And as you will see, throughout the last 4-5 months, our price had consistently and uniformly respected this ascending trend line, and at no point did we see a successful breakdown of this ascending trend line to further buttress the strength of the buyers in this market. Now, in addition to this ascending trend line, we had a couple of levels that we said we will be using to guide our decisions. In fact, we had these levels identified a couple of weeks ago. One of them is the 17,950, which is serving as our key level for this week. And remember, this level was more or less a barrier for buyers at some point during the first couple of weeks in the month of February, as we saw selling pressure around that area as every attempt by the buyers to break through failed at every point in time. And not until last week we saw the breakout of the structure, and we were looking forward to the retest to continue the uptrend move. Now, in the anticipation of the retest of structure, we saw what happened throughout of last week's trading session, as we saw every attempt by sellers to continue to the downside was met with strong resistance from the buyers, and this continued into this week. And look at how beautifully the key level at the 17,950 shares a beautiful confluence with that ascending trend line. And for me, a continued buy pressure within this confluence for me is a good signal that the uptrend potential of this market is still intact. So buying at that point yesterday made a lot of sense for us, and once again, congratulations to everyone. Now, one thing that we'll take note here is that in the last couple of weeks now, you will see that the market has been range bound as price action is trading within the all-time high at the $18,410 level and the $17,950 to emphasize the prevailing uncertainty in this market. Now, the question going into today's session is, how are we going to see price continue the uptrend, where the breakout of that resistant line will welcome more buying opportunities, or are there chances that sellers could break through the ascending trend line and that key level to incite a sell-off? But for me at this point, I'm leaning towards an uptrend continuation, considering the continued buy pressure above the 17,950 level. Now, with the information we have gathered here, you would agree with me that we are at a crucial juncture in this market, where depending on how the market participants react to this current structure will determine if we are going to buy or sell. So scaling back down into the 1 hour time frame, we see things more clearly as we try to position ourselves for the next move. So as it is, okay, I think there is a structure we identified on the 4 hours time frame. Yes, we have. Okay, so this ascending trend line here, can you see this ascending trend line is still being respected, the one we drew on the daily time frame? So right here, sorry, we are going back into the 1 hour time frame. So right here on the 1 hour time frame, you can still see the ascending trend line reflect here. And look at what we have right now. Price action is trading above the ascending trend line. Some of the opinion that we are back within the buyer's territory. Now, for the fact that price remains above this trend line, above our key level, we would continue to look out for more patterns and structures to continue the momentum to the upside. So the first thing I'm doing this morning is to acknowledge the highest point for price action for this week, which is exactly at the $18,240 level. So you do want to be marking out this level, as we're definitely going to be adding more buy positions to our existing trade as we continue the momentum to the upside. So if price breaks out of the structure, we definitely want to be adding more buy positions to our existing trade. So placing a buy stop order above that structure makes a lot of sense at this point. Now, in as much as we're looking out for more buying opportunities, remember we also have a key level here since yesterday. Sorry, we have a buy stop order above the 18,380 level since yesterday too. So in as much as we're looking out for buying opportunities here, we cannot ignore that sellers may still push price back into either the ascending trend line or the 18,135. If that is the case, please, we will look out for reversal setups here, where the breakout of the neckline will welcome more buying opportunity. So if price drops into that area, let's be on standby to capitalize on that move. Now, if the ascending trend line and the 18,135 level gets broken to the downside and a retest of structure happens, then this could welcome selling opportunities. So let's keep this in mind, and the 18,135 area could be a yardstick that will guide any selling potential from this structure. So let's see how the market will play out today, but I still have a strong feeling that the market will continue to the upside. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off, see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So in the absence of no questions, I'll just take that as a confirmation that we are good to go. So it's on this note, we'll move on to the next assets on our watch list. So the next asset on our watch list for today is the GBPUSD, and at this juncture, all sell position must have been closed if you had moved all your stop losses appropriately. But if you had not, please do so at the moment. Lock in your positions, move all stop losses accordingly, as we begin to notice some buy pressure resume since the later part of the New York session yesterday struck the Asian session. And at this juncture, it appears that the GBPUSD is consolidating yesterday's rebound. And remember, we talked about the UK's report this morning, which indicated that the economy expanded by 0.2% in January after a 0.1% contraction in December. Additionally, industrial production and manufacturing production reports in the United Kingdom were reported at a negative 0.2% and a 0.0% respectively on these factors. Now, how has the market reacted to this event? Despite the mixed economic data from the United Kingdom, market participants showed little reaction to this event, causing the GBPUSD to trade within a narrow range, just right below our key level at the 1.2800 area, to emphasize the prevailing uncertainty going on in this market. Now, currently, the prevailing trend appears bearish as long as the price remains below that descending trend line we identified yesterday. So you can see that price is coming close to that descending trend line. So please, if you still have your positions running, kindly move your stop losses, secure it, or probably get out of your positions at this point. Now, for the sake of those who missed out on yesterday's session, that is, if you didn't come to this platform yesterday or on Monday, let's run through what really happened at the beginning of the week that led to the selling opportunities we capitalized on. So at the beginning of the week, we saw price cut within a range between the 1.28650 level and the 1.28450 area to emphasize the prevailing uncertainty at that point. And usually whenever we have a range bound structure like this, we exercise patience waiting for market participants to make a decision which would reflect on the chart as either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And during our live session on Monday, we already witnessed price breaking down the support line, coming back to retest, and we decided to place a sell stop order below the 1.28450 area to capitalize on the bearish move. And since that moment, we have been selling the GBPUSD. Remember, we had multiple entries. We had the second positions at the 1.28250 level. We also added more, had the breakdown of the 1.28, and finally yesterday we added another one, had the 1.27760 area, which did not do very well. So the first three position was quite on the positive side of our portfolio, while the fourth one did not do well. But in total, we are doing very fine on the GBPUSD. And for those of us who capitalize on these opportunities, well done and kudos to you. So at this point in time, what is going to be our plans for today? Now, following the data from the United States yesterday, where the CPI data came in hotter than expected, we saw the bearish traction on the GBPUSD go further to the downside. And then the report coming in this morning from the United Kingdom, the mixed data we had here, we can see that the reaction is not really emphatic compared to what we usually see when such report comes. And I'm of the opinion that the anticipation of tomorrow's PPI data and retail sales data may likely be a major reason why market participants are being conscious at this point in time. And this may likely lead to an extended sideways trading activity. However, if we look at things from a technical standpoint, looking at what is going on here on the 1 hour time frame, it's beginning to be clear that we might likely be seeing a reversal setup unfold before our highs. Now, if we consider the impulsive bearish leg that brought us into this point and this correction phase that happened here, and then the second attempt by the sellers to continue the downtrend failed at the 1.27760 area, had in fact the last 3 to 4 hours has seen a barrier for sellers around this area. Now, the thing is, this structure here is gradually evolving into what may be a reversal setup in the form of a double bottom structure. And whenever we have this kind of structure like this, it is evident that we may be seeing a reversal move happen. And when we see such, we want to be marking out the neckline, which beautifully shares a confluence with that key level at the 1.28. Now, another intriguing thing about this level is how beautifully it also shares a confluence with this descending trend line. Now, to validate this reversal pattern, we want to see price action break out of that neckline, which will simultaneously break out of the key level and the descending trend line too, to give us a validation to continue the movement to the upside. So at this juncture, we shall be looking forward to a breakout of this structure to validate that reversal pattern. Now, there are two ways to which you can capitalize on this. For those of us who have been profitable so far this week on the GBPUSD, then we can afford to risk some of the profits we had made to test waters around this area and see if it's going to work. So in that regard, you can place a buy stop order above the 1.28 area to capitalize on the uptrend move. Now, if it doesn't work, we know that we are only risking some of the profit we had made so far this week, and we'll still be fine with our portfolio. However, if you are new with us and you do not have anything to leverage on, then I will be suggesting that you exercise patience, wait for a retest of structure before jumping into that buy position. Now, there is a caveat to this bullish setup. That is, if price continues to climb and find new highs, there is this level here. Remember, we had the this resistant line of the ascending channel we identified on the higher time frame. Let me show you quickly so that we can all be on the same page. So if we go back into the higher time frame, the 4 hours time frame to be precise, remember that we spotted this this ascending channel after connecting the series of higher highs, giving us a resistant line of the channel, and then when we connected the series of higher lows, it gave us the support line of that ascending channel. So this ascending channel, this resistant line here, is what I am talking about on the 1 hour time frame. Now, if we join the bullish momentum, and as soon as price gets into the structure, it's somewhere around the 1.285 and the 1.284. So if price gets into this area, we definitely want to be moving all the stop losses on the buy position, secure the buy position while we wait and see how the market will be reacting to this trend line. Now, the reason why I've called our attention to this is basically because of the breakdown of the structure that happened, and then we may likely see price come back to retest it in an attempt to continue the downtrend move. So this is why I said we need to be very careful. As soon as price gets into that structure, move your stop losses, secure the positions while we wait for to see how the market reacts to that area. Now, if continued selling pressure persists below the structure, that is, buyers are finding it difficult to break out, well, this might be the beginning of the second leg of the bearish momentum that started last week Friday. Now, to capitalize on the bearish momentum here, we want to see selling pressure. We want to see a form of reversal pattern. It could be a double top, head and shoulder, or a rising wedge. Once we identify this pattern, we mark out the neckline and then sell the breakdown of the neckline. However, if instead price action breaks out of the trend line and retest it, then we want to be in for another opportunity to buy. So this is how we are going to be managing this. I needed to show you what things are looking like on the higher time frame. So let's go back into the 1 hour time frame. So that is the trend line right there. So it's going to be between the 1.28450 and the 1.28600, maybe. Let's call it this. Let's be precise, between this area. So it will come back into that range. Remember, this is the range where we saw the bearish momentum happen at the beginning of this week. So we could see selling pressure again persist around that area, and look at how beautifully that ascending trend line shares a confluence with that selling niche that started the bearish momentum for this week. So let's see how the market will play out. So how many pips is that from this level into that structure? We are looking at about 60 pips to catch here, and if price breaks out, then we will be thinking of adding more buy positions to our existing trade. So this is my simple view as regards trading the GBPUSD if price action breaks out of the 1.2800 area. Now, if the contrary happens, that is, price does not climb up but instead continues to drop to the downside, then I want to be looking out for selling opportunities only when the lowest point for this week at the 1.27600 level is broken to the downside. In fact, a breakdown retest of the structure will give us a signal that price action has taken out all the buy positions within this particular area. So this is my simple view on the GBPUSD for today. I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So let's see how the market will play out. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in, guys. All right. So, in the absence of no questions, let's move on to the final asset on our watch list for today. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And on the XAUUSD, all the sell positions we had from yesterday appear to have been taken out if you had moved all your stop losses accordingly, as we did experience a sharp decline in response to the US inflation reports that surpassed all markets' expectations, leading to a rise in the US Treasury bond yield. And of course, we know how the US Treasury bond yield is directly proportional to the value of the US Treasury bond yield is directly proportional to the value of the US dollar. And in a situation where the US Treasury bond yield gained some, I think it gained about 0.5 basis points, I guess, yesterday, and this resulted in that positive traction too in favor of the US dollar. Now, for those of you who still have a sell position running on the XAUUSD at this point, kindly close this position, as we may likely be seeing a reversal setup evolve at this point in time. Now, before we go into the details of what's really going on in this market, let's run through how the week began for us all for educational purposes and see what led to the situation we had. Though the week did not start very well for us, remember we were buying at the beginning of the week after citing this range bound trading activity. Initially, the range was between the $2,189.50 level and the 2,177 area at the beginning of the week, and the inability of sellers to break through for us gave us a signal that maybe buyers are trying to build up a momentum, and as a result of that, we did wanted to capitalize on that bullish move even before the breakout of that resistant line will happen. So we positioned ourselves right above the $2,182 area, but unfortunately we were taken out of that buy position in a loss. Now, during our live session yesterday, we expanded that range bound structure into the $2,175 level, and the appearance of a series of lower highs for us and began to make us suspect that sellers might likely be taking over this market anytime soon. So as a result of this, we had a sell stop order below the 2,175, which got triggered prior to the CPI data yesterday. And in fact, following the CPI data, we saw a little bit of volatility, and I do hope you give enough breathing space, as we had a wide stop loss of a minimum of 70 pips on this one, which lucky enough for us contained the volatility after the CPI data yesterday. And of course, the report from the CPI data exceeded the anticipated 3.1% year-over-year rate, registering a 3.2% higher than January's 3.1%. However, the market has since witnessed some buying interest, but the upward momentum lacks conviction, as market participants await further clarity on the Fed rate cut path before committing to new aggressive positions, as you will see here. So we saw the something like a recovery here. Now the question is whether this will turn out to be a reversal setup that will incite a bullish move, or probably a retracement move is on the way, in anticipation of the downtrend continuation. Now, the unexpected rise in the US consumer inflation has raised speculations that the Fed may maintain rates higher for a longer period of time, potentially limiting the uptrend on this gold asset. However, the ongoing geopolitical tensions in the Middle East should not be ignored, as it could still provide support and limit the downside of safe haven assets such as the gold. Now, given this development, we will try to maintain the structures and use it to guide our trading decisions for today. Now, looking at this bearish impulsive leg from the beginning of this week, that is this one that started from the $2,189.50 level, culminating at the $2,150 area. Let me mark this one out here. So we have the $2,150.50 level, right? So that's the lowest point for price action for this week, $2,150.50 level. That's the lowest point for price action for this week. So we saw price drop into the structure, and this bullish momentum we're witnessing here during the later part of the New York session stroke the Asian session may be a retracement phase of that impulsive move. Now, to project where the retracement phase might likely end before the trend continuation happens, we want to be bringing out our Fibonacci retracement tool, run it through the previous impulse leg, where we shall be aiming at our golden zone area, which is going to be between the 50 and the 78.6% of the previous impulse leg. And if we do that correctly, we are looking at an area between the $180.50 level and the $2,170 area. So let's call this a potential sell window. That is if price gets into that area. So we are looking at between the 2,181, right? So we have 2,181 level and the 2,170 level. So we do want to be marking these out appropriately on our charts, as we will be needing them as a reference point to guide our independent trading decisions for today. So I always like my buy or sell windows should be in a lighter yellow color. So beautiful. So here we are. So we have something like this. So we should just take out the retracement tool. Now look at this structure. Look at this descending trend line we identified at the beginning of the week. Look at how beautifully it shares a confluence with that potential sell window. So let me just extend this out a little bit so it can capture this whole structure we have here. Now look at the support line of that range we identified at the beginning of the week around the 2,175 area. Now, will this bullish momentum we are seeing so far continue in such a way that it gets into the structure, where we will be looking out for patterns and structures that will support the idea of selling? It could come in the form of a double top structure, head and shoulder pattern, or a rising wedge, and all we just need to do is wait for the breakdown retest of the neckline of that structure to join the downtrend continuation. And if the contrary happens here, that is, price breaks out of this sell window, breaking out of that descending trend line will be welcoming buying opportunities. Now, this is where it gets interesting. Now, if we look at the structure here and look at where price action is at the moment, and look at the distance between where it is and the lowest point, the minimum is 80 pips and the maximum is about 190 pips. So can we consider capitalizing on that uptrend move? That is, let's join the move all the way into the structure and then secure the buy position and wait to see how the market reacts to the zone. If it breaks out, we want to be adding more buy position, and if we find a reversal pattern, then we will be joining the downtrend move. Now, to do this, we need a trend line to guide our decision. So if we bring out our line chart and connect the series of higher lows, we have a temporary ascending trend line to work with. So I would like to thicken this a little bit to emphasize its importance for today, and I would like to give it a green color instead. Okay, so we have something to work with at this point. Now, if price continues to trade above this ascending trend line, let's look out for structures to guide that move to the upside. So I will be suggesting that a breakout of the 2166 could make a lot of sense to buy right there, and then as soon as price gets into the sell window, we move all our stop losses, secure the buy positions while we wait and see how the market will react to that window to decide if we will be adding more buy positions to our existing trade or get ready to join the second leg of the bearish move. So let's see how the market will play out from this particular area, as you will see. So buy here, and if the buy continues, then we are looking out for more opportunities at the breakout of the highest point for this week at the $2,189.50 level. However, if price does not come even close into the sell window, that is, it doesn't break out of the 2160 and instead continue to find selling pressure, then the breakdown of this ascending trend line will be a beautiful opportunity for us to join a bearish move. So what I will do here is to readjust this 2155 area to 2160.50 level, which beautifully shares a confluence with that ascending trend line. So let me mark this as the 2160.50 level. You want to be doing the same too. So if price drops below the ascending trend line, then it will break down the 2160.50 level, and then we can join the bearish move to the downside, where a further breakdown of the lowest point for this week at the 2150 will be welcoming more selling opportunities. And if price goes ahead to break down our key level at the $2,143.50 level, we will be adding more sell positions to our existing trade. Now, if we are going to be considering the geopolitical tension in the Middle East, which is likely going to be stabilizing the price of the gold assets, I want to call our attention to this key level at the 2143.50. So remember, last week we saw price break out of the key level, and as it is right now, we are looking at a retracement, maybe in an attempt to retest the key level to continue the uptrend move. So if price gets into the $2,143.50 level, we shall look out to see how the market reacts to that structure. So a breakdown will welcome selling opportunity, and a reversal pattern or double bottom structure will welcome buying opportunities at the breakout of the neckline. So this is my simple view on the XAUUSD for today. I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So here we are looking at selling reversal patterns. So I want to label this arrow reversal pattern. So if we see a reversal pattern there, we are selling. Okay, so here we go. So let's see how the market will play out from here. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next before we start rounding off on today's extra speed live technical analysis session. All right. So, in the absence of no questions, I think we have come to the end of today's Extra Speed Live technical analysis session. It has been a wonderful moment with you guys as we were able to take on all the 4 assets on our watch list for today, which includes the USOILSPOT, the USTech100, the GBPUSD, and the XAUUSD, and all of which we were able to identify simple trading setups that we will be using to manage our positions today. And I do hope we all marked out these levels and structures accordingly during the course of the session. If you had done that, well done and kudos to you. So all we need to do is exercise patience and allow these structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, ensure you have a well-defined risk management strategy in place. For those of you joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us, the better you get to understand our analytical approach and eventually use the information gathered here to enhance your own trading decisions. So I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and at the same time prepare for another exciting edition tomorrow, as everyone looks forward to the producer price index and the retail sales data from the United States economic docket, promising to bring some positive traction in the market. And of course, we want to be on standby to capitalize on that move, so you don't want to miss out on tomorrow's session. So I look forward to seeing you right here same time tomorrow. So it's on this note I want to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.